Are you a freelancer or small business owner who keeps hearing you need to do bookkeeping, but you're not really sure what does that mean? You're not alone. Most people think bookkeeping is complicated, but the truth is, it's just a system to check your money, where the money comes from and where it goes. And in today's video, I'll break down exactly what you actually need to do, step by step, even if you have zero accounting experience. Let's start with the basics. Bookkeeping is simply the process of recording and organizing all the financial transactions in your business. Think of it like a money journal. Every time money comes in, you write it down. Every time money goes out, you write it down too. Why does it matter? Because good bookkeeping helps you know how much profit you are actually making, understand where your money is going, make tax time much less stressful, and helps you make smarter business decisions. The first thing you need to do is record every dollar you earn. If you sell a product, do a freelance job, or get paid by a client, you need to log in. Here's what you should write down: the date you received the money, who paid you, what it was for, and how much it was. You can do this in a spreadsheet, bookkeeping software, or even a simple notebook. But the key is to do it consistently. Next, check every time you spend money for your business. This includes things like office supplies, software subscriptions, marketing costs, meals, or travel for work. Just like income recorded, the date, the vendor or store, what you bought, and how much you paid. And here's a pro tip: keep all your receipts because you might need them for tax deductions or proof later. Once you are checking money in and money out, the next step is organizing it. This means grouping and categorizing makes your financial reports clear and helps you see where your money is going. It also makes tax filing easier because many tax forms use this categorize directly. The final step is something most beginners skip, but it's crucial: reconciliation. This simply means comparing your bookkeeping records with your bank statement to make sure everything matches. Do this at least once a month. If something doesn't line up, you can catch mistakes earlier instead of at tax time. And once you reconcile, take a few minutes to review your numbers. Ask yourself, are expenses growing up? Which months were the most profitable? Are you setting aside enough for taxes? That's it. Bookkeeping isn't about complicated accounting. It's about building a simple habit of checking, organizing, and reviewing your money. If you can record your income, check your expense, categorize them, and reconcile monthly, you're already doing 90% of what bookkeepers do. And trust me, once you get into the routine, it'll save your hours of stress and help your business grow faster. If this video helps you, hit the like buttons, subscribe for more simple business tips. Let me know in the comments if you have any questions. See you in the next video.